Good day to one and all. This is Dr. Sivaraman of iknowintersys.com. So we are on Friday today, 29th of January. I have given the forecast and also the expected market moves for this week, starting from 25th of January till today. So during this Asian session live market analysis and the forecast webinar, I am going to review the forecast, what I have given for this week, Monday to Friday, session-wise forecast, and also the levels in which the currencies are expected to swing. That also I'll try to review and find out how far the forecast is dependable and which is easy to follow. Now my contact details are given here. If you are not able to follow any of my informations, what I have given it, you can always contact me through email or through chat and ask your questions. I am willing to answer to those questions. During the webinar time, you can ask in the FX Trade Forex live video chat your questions. I'll be willing to answer to your questions as well. So let us move on to that of the forecast part of it. So normally we take into consideration the algorithm-based statistically derived forecast for a larger perspective of the market moves. Then we fine-tune it using the market reading and the live market analysis using the live market code page. And in the event if the market goes against, then we try to use the trading strategy to limit the risk and maximize the profit. So the combination of all the three is able to give us a consistent profit from that of the Forex market. Now this is the forecast sheet, what I had displayed it on 25th of January on Monday. This being the last week of January and today happened to be the last day of January. The monthly trend reversal moves are bound to happen. So we have seen how volatile the market was, and we have seen also initially they made the slide in the case of Euro and GBP, and then subsequently even GBP came down to that 1.42 area. From there yesterday they took it up to 1.44, and then they just made a small dip again around 3:30 GMT for that of the data from Japan, and then subsequently they made the gains again in the case of Euro and GBP. And now you come across that Japanese yen, USD yen has gained quite a lot. That means yen has weakened. USD yen has gained about 131 pips and it went up to 121.40. And as I was telling you on Monday that they wanted to drop Euro and GBP as well, USD yen, they came down in the case of USD yen to 115.97 as a stop and extended stop and move, and they are expected to gain the levels. So same way, today they just simply gained from 118 to that of 121 level and come down and still holding around 120 to gain further during that of the US session. So this is what they try to do it during that of the trend reversal time. And as in line with that of the expectations, and if you have noticed, those who have been tracking the session-wise forecast and the market moves would have noticed that most of the time the market has followed the forecast, excepting one or two sessions wherein the sideways moves were seen, especially on Wednesday when the prime data, the FOMC interest rate decision was announced. So the market was making a dip and then holding, but did not make the firm up. But then subsequently from yesterday US session, European session, they started gaining the level. And today 29th, the last day of the month, they are expected to make a dip and then rise. The dip they made around 3:30, and then subsequently they gained the level. Slowly they are expected to gain the levels in the case of Euro and GBP as well as USD yen. And USD yen, they are expected to gain further above that of 121.40 by US session. So you just watch how exactly they handle yen and yen crosses during this particular time frame. During that of the European session, they will gain the levels in the case of Euro and GBP and slowly gain the level in the case of USD yen. As a result, yen crosses will gain And towards close, they will make a dip in the case of Euro and GBP and again gain the levels during the US session. And this is what you come across during the monthly trend reversal time as up and down moves. And in such volatile moves, if you watch carefully, they drop about 100 pips and gain about 200 pips. Drop about 100 pips, 150 pips, gain about 250 to 300 pips. This is how they make the spread wider. And that sort of volatile moves, no technical analysis will be able to explain, because normally the technical analysis will be able to explain the trend if the trend is going to be genuinely followed by that of the market, that is higher highs and higher lows and things like that. But if they make either way volatile moves, then invariably the analysis will try to say that it could be a divergent or it could be just a reversal of the market, and suddenly again the reversal or a deviation or a divergent, etc. So invariably you find that the market becomes bearish to bullish, bullish to bearish alternatively because of the volatile moves. And the players do it in such a way so that they'll be able to make extreme extended stop and moves in order to induce the traders to liquidate the long position if they hold it without booking profit, and also induce the traders to go short and later on trap them vulnerably by making a massive gain. So invariably when the traders lose and even the small institutions lose, the players make all the money. People might be talking about the hedge funds and things like that, and they also lose. So ultimately, you have to understand it is not simply hedging the market will protect us, and where exactly we are doing the hedging and how exactly we come out of the hedging is vital. And that is a trading strategy. Simply when they use the term hedge, it doesn't mean they are very successful. So always keep in mind that we have to perceive the market appropriately, read the intentions of the players from time to time. So my entire effort in the postdoctoral work was to read the intentions of the players independent of their hidden agenda, and so by which I am able to give the forecast and also the mathematically derived levels in which the currencies are expected to swing. So in the case of Euro, they came down to 1.0790 and went up to 1.0944 yesterday, and they are holding closer to that, and they are expected to breach today during that of the Japanese, European and US sessions. And in the case of GBP, they came down to 41.75 quickly and reversed, and yesterday they went up to 1.44, and slowly they are expected to take the market above 1.44 today. And in the case of yen, they are expected to gain up to 121.50. They went up to 121.40 and come down from that of 117.66. This was the expected level, 117.75 to 121.50, and they are expected to slowly hover around that level towards close of US session. And next week again, USD and they are expected to make a massive drop and then gain. So don't simply become bullish because it is the month end trend reversal. They are trapping the traders. Similarly, month beginning trend reversal, they will try to make a massive drop after holding it for a day near that of the high. They will make a continuous drop in the case of USD and telling some other story as if the economic conditions of Japan has changed overnight, and then later on they will gain from that of the second week slowly in the case of USD and gain it above that of 121. And in the case of CHF, 1.0050 level, but they came down to that of 1.0111. Today they are expected to come down a little bit below, and they are expected to rise higher in the case of USD CHF later on next week. And in the case of Canadian dollar, from that of 1.46, they dropped it to 1.42 and then went up to 1.43 just to confuse the traders and made a massive drop. Yesterday they formed the low below 1.40, the psychological level, to 1.3948, and then they are holding around 1.40 now, and they could make brief upward stop and above that of the high 1.4055, and then make further drop. So this is how the wide range swings from that of 1.46 to 1.46 was an extended stop, and from that of 1.44, and they are expected to make a downward extended stop, and from that of 1.39 to 1.37 area, and then again they are expected to gain the levels when USD is also gaining level during the course of the month of February. Then in the case of Australian dollar, they made the drop to that of 0.6919 as an extended stop, and then quickly gained the level to 0.7128, and today they are expected to breach 0.72. So you will find that the market is moving in line with that of the derived highs and the lows for the week. So this will be able to give you an idea how you can just take the buy position when the market is closer to that, and use the hedge to limit the risk in the event if they go down, books small profit below that and keep hedge order, and they will again go up, then trail the hedge order upward and then maximize the profit till they reach the high. This way you will be able to really capture nice profit. I'm giving it free of cost mainly for those who wanted to really earn money from that other market, but they don't have any clue because they cannot afford to pay for any subscriptions. So for such people, I am trying to help. So understand that these are all valuable informations for you to use it. Just because it is given free doesn't mean that it may not have the value, and you just watch how exactly you come across the benefit out of that, and later on you can make use of it. I'm not compelling you, but you need to understand that the true intentions of the players are vital for any trader to earn, even the institutions to earn money from that other market. Then with regard to the market reading, we note down the initial lows and the highs around 3:30 GMT and try to compare how exactly the market has made the moves. In the case of Euro, they just came down below the 1.0929, that was the initial low, to 1.0883, and then went up to 1.091516 level. They are expected to go above this after the extended downward stop for about extended move for about 2 hours. They are expected to gain the levels. And in the case of GBP, 1.4350 was the initial low. They came down to 1.4334 and come above that of the initial low, 1.4350, and staying above. And so GBP is expected already, it's in the positive net change. It is expected to go above 1.44 level during the Japanese session. And in the case of yen, 118.53 was the low. They just set, they did not breach, and 118.97 was the high. In this week, they went up to 118.99 yesterday and came down, and they wanted the prime data release, and then they made the quick upward extended move to 121.40. All quick moves are false move, which can understand how they went up to 121.40 and came down above that of the initial high. So they are expected to hold here above that of the initial high, 119, and 119 to 120. It has become a non-trading zone. This is how they do the shift in trading zone. They don't retrace it. Probably next week during that of the false move, they could make a downward move to 119 and then again gain above 120, and slowly they are expected to gain to 121 towards close of the US session. Then CHF, they came down to 1.0133, and that has not been breached, and the high was 1.0145, but they went up to 1.0224 and came below and holding here. So USD CHF is also expected to gain along with that of Euro. As you notice that Euro CHF and also GBP CHF, they gained massively after gaining and dropping Euro GBP, the European cross. So they are handling the crosses by making contrarian moves in the market. Then in the case of Canadian dollar, you know that they went up to 1.46 and then from there they dropped it, and 1.4051 was the initial high. They just made a brief upward stop into 1.4055, started dropping, and they come down to 1.4013, below that a 1.4028, and then slowly they are expected to make a drop during that of the European session and US session. Then in the case of Australian dollar, 0.7075 was the initial low. They just breached it by about 7 pips and come above, and then they breached the high and staying above. So it is an extended downward stop, and below that of the initial low, and gained and went above that of the initial high and staying above to make for the rise during the day. So this is how they make the move. So whatever the technical analysis we try to do, and if you find that you are stopped out during that of such extended downward stop, then the people might simply say that it is noise during which your position was closed. But if you are a smart trader, during such noise you try to take the buy position, then you will be able to really capture good profit. Then coming to that of the trade recommendations, I kept the buy limit order at 1.0890, and the take profit is at 1.0960. Now you have to keep around 1.900. They could make a dip and then gain, and stop can be about 30 pips or 40 pips below that. Hedge order can be placed, and once the position makes profit, you can keep stop at entry. And in the case of GBP, I kept the buy order 1.4340, but they came down to 4334 and went up. And now we have to make it as 4355. 50 is the initial high. See, initial low, we have to keep it above. Then they will make it fill and then go up. Then you can try to maximize it, the profit around 1.44 level. So these two are the recommended trades for today, and they are expected to gain more levels. So it is not the question of the USD bullishness, USD bearishness, etc. It is a question of money earning process of the players. So by simply telling I am bullish in US dollar or I am bearish with regard to US dollar, you don't gain or lose anything. Nobody is going to be a friend of you or an enemy of you. Ultimately, what is important is whether you are able to perceive the market correctly and earn money from that other market. Earning one day, losing the next day, earning another day, losing the next day, it's of no use. Because ultimately, wherever you have started, you will be staying, and all the time you have put in, all your efforts you have put in will go waste. There is without any earning. So we have to value our time. We have to find out whatever the time we spend should be a quality time, and we should be able to earn money or the fame for us. So ultimately, we have to see that we are spending the time usefully in order to learn how exactly the market should be read and to earn money from the market, rather than simply going with it of the distractions. The distractions are part of the game in order to deceive the traders, so that when the traders think that okay, they are all the true pictures and try to take positions, they lose. When the traders lose, the big players earn. It is a merciless killing, financial killing of the traders, but we cannot help it. So ultimately, understand that we have to be a smart trader one day or the other. Not all the time you follow the technicals and fundamentals and continue to lose that and say that I'm an experienced trader, I've got an experience of over 15, 20 years in trading. It's of no use unless and otherwise you have learned the mechanism of making money from that other market. These are all the market timings, so you can make a note of it. And so early and the late sessions, they handle the majors. In the mid sessions, they handle the crosses. Watch carefully the session timings. Early and the late, early session, you take the position. Late session, you close it. So when you see swing and slide, that means early session, they will make higher level swing. Late session, they will make lower level stop. And then again, lower level swing, and then gain. So lower level swing during that of the early US session and gain during that of the late US session. Mid session, they will make the contrarian move in order to handle the crosses. So this you need to understand. So I'll try to answer to the questions which are asked here. Grace has got a question. What is your take on the supermarket rally today? Do you think that the oil will still push upward to hit past 37? See, you can call it by any name, supermarket rally or whatever it is. So it is a question of euphoria. No? They just create the hype and people go and grab just like that without understanding why we are doing it. Simply grabbing the position is not going to give us the profit. We have to book profit. They don't understand. So once the traders are triggered to become emotional, they make such moves or they take such decisions and lose money. So ultimately, you be a patient trader, and USD will go up to 121. But the thing is, when they are making a brief downward stop and during that of the session close time or section start time, you try to take a buy around 120, then keep 30 pips hedge order. In case if they drop, fine, you book profit on the downside using a trailing stop. And then if they make a rise, use the trailing stop, a trailing hedge order below that of the last making position. Once the position makes profit, keep stop at entry and then maximize the profit during the US session. And they are going to make an intentional upward move in the case of USDN as well as in the case of Euro and GBP today. Already you come across here that USDN and also GBP showing positive net change. Any other question? So got any question, you can ask me. So don't be carried away by the terminologies they use. Every time, no, they use different terminologies. And earlier, say in Japanese yen, which was weakening, and USDN was gaining considerably to 124. And they said the carry trade. Even the Japanese housewives started doing the trade, and like a child's play, they continue to buy every day, and end of the day, they will simply close it with a profit. That is how they just presented. And many people thought that, okay, it is that easy to make buy and afterwards book profit. When the people continue to commit the position out of greed, they thought that it will go to higher level 127 etc. So that they have been simply holding it. What happened when they were busy in the kitchen? They came and saw that market drop to 118, 117, 101 and below 100. That is how. So ultimately, the story of the Japanese wife, Japanese housewife making money in carry trade is totally closed. And then they started using different terminologies. Similarly, now it is a supermarket rally. So every time they use some sort of expressions just to induce the traders to become emotional, nothing more than that, so that the traders will talk about that particular topic and a lot of people will make comments. So like how people have asked here, and I also given the comment, so they continue to enjoy such things, so that basically they want the traders to lose. These are all the techniques. So if you are a really focused trader, you should simply keep it aside and focus on the market using the live market code page. Any other question, please? Okay. Okay, then I take this opportunity. Thank FX Trade for the facilities provided to present the webinar. I'll come back on Monday, 1st of February, and give you the forecast for the next week. First week of February, again, it is going to be a very volatile week, and they will make some extreme moves to set their lows and the highs for the week. So wait for them to settle and then try to take the position, and again you will come across Euro, GBP and USD and to gain during next month. So wish you all happy trading. See you on Monday.